It's all about the reflation trade that we're seeing right now. We've been talking about this for some time. It's almost the opposite what we saw last year with COVID, where you saw growth outperforming the Dow, specifically the Nasdaq outperforming the Dow. Now you're seeing the reverse of that. So when you have interest rates rise, like we're seeing right now, you're going to see value and cyclicals start to outperform growth, and that's what you're seeing right now.
I mean, do you think this is the trend, Phil? Like, one day doth not a trend make. I think Shakespeare said that, but do you think this is the trend that's going to occur? Higher rates, good for financials, big tech. It's already seen its time. Time to reinvest back in smaller cap American stocks.
It's obviously always tough to call. There's been a few head fakes over the past few years, but I actually do believe that this is for real. And the reason why is I do think all the stimulus that we put into the economy, I think the helicopter money that we're going to see, that we saw and we're going to continue to see this year is all going to be inflationary, which is going to drive rates up. And if that does continue to occur, the 2 and 10 year spread, as that continues to widen, you will continue to see value and some of these cyclicals outperform. They've been the leaders off the bottom since March 23rd. Not many people really understand that. Small caps, cyclicals have outperformed growth since March 23rd. So we do believe in any new cycle, there's always new leadership. And we believe that the leadership is going to be the cyclical value story going forward. So I know a lot of investors love their Apple stock, Microsoft stock, and NVIDIA, which are great long-term businesses to own for sure. But it's not a bad time to rebalance some of those positions into the cyclical area.
Maybe into a name like a Bank of America. Hey, if interest rates are going up, albeit off incredibly low levels, could be good for a BAC, a JP Morgan, and others.
So Bank of America is one of the best positioned banks, we believe. And the biggest reason why is because they're the most interest rate sensitive bank. They have more exposure to consumer and commercial banking than any other bank. So a 100 basis point move in interest rates can be $10 billion to revenue overall for Bank of America. So when it comes to interest rates moving higher, Bank of America is one of the best banks to be positioned in. We've been building a position in Bank of America since April and May of last year. We continue to be long Bank of America and a believer that this is for real for the banks as well as interest rates move higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.